All right, Aaron, great to have you here today. Just really kind of wanted to bring you on to talk about insurance because I know that everybody loves what's happening with the insurance world today and how the market has changed in the insurance and multifamily. So, but before we get into that, man, I want to talk about who you are, what the heck you're doing, and why you're so young in this industry.
Well, thank you. And thanks for having me on. Yeah, I've been doing this just over 5 years this August. I started kind of niching down into multifamily, I would say probably about 3.5 years ago. Current to date, I stopped counting after about 10,000 units, but it's somewhere in the ballpark of 15,000 that I insure. I'm a passive investor in some of the deals that I also write the insurance on, which is kind of a nice little, tag team. And yeah, I'm with Ramey King. We're out of Denton. Multifamily is our niche. It has been for years, and our owner kind of showed me the ropes and what to do, what not to do, and frankly just kind of fell on my face as fast as I can and as fast as I could and as many times as I could, just to because frankly that's what makes you an expert.
Sure.
So
you only invest in deals that you insure, I'm assuming, right? Because if they don't use you, they're probably not worth investing in. Is that kind of what it is?
Honestly, if the numbers were great, I'd be totally open to it. But it's the people that I invest with have been clients for over a couple of years now that I know they know what they're doing. And as sad as it sounds, I don't even look at the pitch deck. It's just it's like them questioning me on insurance. Like, you're welcome to try. I'm going to take laps around you. It's like me at questioning why are y'all buying this property?
Great point. Great point.
So
I really like that. So we know that we're in a interesting time in multifamily today, right? So I mean, it's we've seen the options that are out there for new investments and the opportunities to purchase new properties are much less than they have been in the past. But how has that affected insurance, or has that affected insurance in a way, or affected insurance in a way that changes things for you? Because I know policies renew every year, but is it the down economy? Is it insurance is the reason they're down economy? I mean, we've heard all kinds of stories, so I want to hear it from your perspective. Kind of, what are you seeing out there?
So the reason insurance is at where it's at, there's a few reasons, okay, and I'll give you the casual explanations first. It's the increase in replacement costs that has gone up, and you see carriers that, let's say you've got a 10 unit or a 10 building complex, and they're offering a blanket coverage at $100 a square foot, and the rates that they were charging, they basically just were not, it wasn't profitable. And so even though replacement costs were skyrocketing, I mean, you would know this, I think lumber at one point shot up like 300% over a few months.
Yeah.
And
I have some stories about that one for sure.
Yeah, exactly. And so you mix that with, and even in most of my book, I live in the specialty lines market. The carriers I write with, 98% of the time you've never heard of. Okay, and I'm writing on master policies, aka shared limit programs.
Yeah.
Well, most of the time. That's a topic for another day. But outside of the increase in replacement costs, I think the main other factor has been capacity issues. So I'm having a lot of carriers, like I just had one recently that was able to offer $30 million per location, up to $30 million on the total insurable value, and they just got dropped down to 10. I know of other companies, a couple of insurtechs that were given, from their fronting carriers. They started at $5 million per location. Now they're allowed 10, but not more than that. And then I've had, I'll just give you an example. So I had one. This is probably my best example. It was 350 Class A units in Spring, okay, and that's in North Houston, and they had the total insurable value on that. I can't remember. It was maybe 60 to somewhere between 60 and 70 million, and they had a carrier that wrote what's called the ground up limits. Okay, so they wrote the total insurable value, that full 60 to 70 million, whatever it was at the time. At renewal, they were basically like, we want the same price. We want, we're going from a 3 to a 5% on the named storm, the hurricane deductible. And we can only offer a 10 million primary. Meaning you need to go fetch the other 50 to 60 million on top of us. Well, on a Class A sprinklered property with the good fire suppression system, I always get them 13 and 13R mixed up. I always get the one that's not made just to get people out safely.
Right.
The one that's made to actually extinguish the fire.
Yep.
Yeah. Now, why the likelihood of a claim exceeding $10 million, why not just offer the full TIV, the full total insurable value?
Right.
It was capacity, which all ties back to reinsurance. So that is a whole, I could go off on a full-blown tangent, and I have a really bad habit of doing that, so feel free to cut me off. But that is why Houston, and when they saw it in Florida first, and there's a lot of overlap in terms of the carriers that write in Houston and Florida.
Yeah.
And so, I mean, I knew 2 years ago that Houston was going to get real ugly really fast.
And is that is that a geographical location? Is that a classification of the property issue? Where do you think that really lies? Because, I mean, Class Cs typically don't have sprinklers, right? Let's talk about that, right? And then you have Class Bs. Some of them do, some of them don't. So where are you seeing the threshold of saying, oh, no, I'm not going to cover 50 anymore, I'm going to cover 10? Is that because of a classification, or is that just generally because somebody told them they can only do 10 million in that market?
So it depends. That's the two biggest words in insurance. A lot of times it ties back to your reinsurance, to the carrier's reinsurance. So if your policy is written by ABC Insurance Company, ABC Insurance Company is actually paying like 35 to 40% of the claim if you have one.
Yeah.
It's their reinsurance program. The carriers that are backing them, the reinsurance carriers, they're actually the ones paying 50%, if not more, of the actual claim.
Okay.
Yeah. And so, but back to your question on it's not that it's Class A, B, or C tied. It's more geographical. It's more if a company writes X amount in in a certain zip code. Well, when they have their reinsurance renewal, they have to essentially, and this is back to my 10 million example, oh, now we only have 10 million of exposure at this address.
Right.
And so these carriers have to do what's called PML modeling, probable maximum loss modeling. Okay. They have these simulations. If a Cat 5 hurricane rolls through Houston, how screwed are we?
Yeah.
You said no cussing. So but back to your point, not only so I answered the concentration issue maybe in certain zip codes, but yeah, once you get closer to the water, you're more likely to be impacted by a hurricane. Right. I mean, that property in Spring, what is Spring, 60, 65 miles from the water?
That's right.
Yeah. So, but yeah, once you start to get into Brazoria, Galveston County, south of Houston, now carriers are like, now we'll offer just a $5 million. All we can offer is $5 million at this location.
Yeah.
So talking about different locations, we know, everybody has their niche market, and everybody has an area that they like to invest in and buy properties in. From an insurance perspective, what's the best market for getting low cost premiums?
If you want the cheapest rate in the United States, I would say Class A in Phoenix.
Phoenix.
Desert.
And yeah,
And it's gonna rain.
Yeah. You don't have to be on some specialty lines market. Any standard nationwide Travelers, Hartford, they'll all eat that up all day.
And I know there's kind of a per door price that you're typically used to, and I'm not asking for that now. Please don't. But is it 50% cheaper per door in Phoenix versus Galveston?
That's probably a hell of a lot more than 50%.
Okay.
But to give you an idea, people say, when people reach out to me, Aaron, if I buy this if I'm going to submit an LOI on this property, can you help me underwrite the insurance on it? Well, it all depends on one of my main questions is what does the debt look like? Who's the lender going to be? Am I dealing with someone that wants insurance and the loan amount, like 84-year-old Peggy at the regional bank that doesn't know that is just checking 2 boxes on my certificate? The amount of does it cover the loan amount, and is our bank listed as the lost payee? Yeah. Or am I dealing with I won't name drop here, or am I dealing with some more of my pain in the rear end lenders? And I've noticed with a lot of Fannie, Freddie loans, they are really living in the past. In terms of replacement cost. I had one recently, they just wanted $86 a square foot. And this was on one out in Tyler that's about to close. And it's funny because I had quoted it through a master policy. And it's funny how they you send them that and they freak out, shared limits program, but they would allow 90% co-insurance at $86 a square foot. And just to give you an example of co-insurance, if a building has a claim and its replacement cost is $1 million, it has to be insured for at least $900,000, 900% or 90%.
90%,
Yeah. So how much coverage did you have divided by what does that 90% come out to times the amount of your loss? I had a guy reach out to me over Twitter, and it was a property down in Temple. It was a smaller one. I think it was like 32 units. And I remember the seller was insured for like $60 a foot, 90% co-insurance. And I was like, that's bad. Like that's E&O on the agent at that point.
Right.
That's negligence.
Right.
That's bad. You don't have to be an expert in multifamily insurance to know that.
Yeah, that's not gonna.
But So and anyway, I do want to touch on one other thing is I'm seeing a lot of these why insurance premiums are going up, and even in non-convective areas where you don't get these hailstorms or hurricanes, you're not in tier 1, coastal market. There is a very well-known carrier that is basically non-renewing their entire HAB book, their entire book of apartments, because I think with offering the rates that they were offering, and then you get these increase in reconstruction cost, asbestos abatement is not cheap. They started to realize we just want out of this Class B and C property area. We want to focus on A, which is just an absolute red ocean. My insurance company is going to be called 33 Insurance Company. 33. I only want 3 stories, and I want a 3% wind hail.
I like it.
And I'll do a per building wind hail deductible. So if a tornado comes through, I'm not going to financially devastate you, but I'm not covering your hail. Sorry. You can go buy a standalone buy-down policy for that if you want to play it safe.
I get it. It's insurance is a game for sure, and it's fact how I got into the construction business, right? So started in roofing and did a lot of fire and hail claims, and I did that for years and was very successful. So I know the worst side of your story of fighting the insurance company and making stuff happen. Dana as well. So we know the insurance game pretty well, but we're both out of it. we understand the value of creating value for these properties and long-term for the investors, so.
And roofer siding deductibles for years.
Yeah, well, that's now legal, so, I mean, maybe it's always been illegal, but
I heard
now it
it's-
really is illegal.
I heard, yeah, and I know that. Now, how strictly enforced is it? I don't know, but
I'm not testing that market,
It's
I
always
promise, I
illegal.
would.
I have seen some loss runs, which is basically shows the claim history, and you're just like, oh, there were some inflated invoices from the roofer here,
Maybe.
you know? and that trying to cover the deductible, and that led to another increase in rates.
For sure.
You know.
For sure.
So, regardless of where we pick a property, right? Is there some ways or a way, the best way to save on the insurance cost? You know, I know we could all pick Phoenix, but there's only so many properties available in Phoenix, and we're gonna have to buy them somewhere else probably.
Yeah.
So, is there another way to save on cost?
So, in terms of saving on cost, in your due diligence, you want to look at multiple things. So when I'm running an estimate for a client, I'm checking a few things, not only flood zone, not only the size of the buildings, which I'll circle back to, but also the crime scores in the area. And so you're going to pay, and general liability in the umbrella is usually a smaller slice of it's not, you know, the property premium is your bulk, but what I've always been told by my account manager that's been in insurance for 40 years, if you're ever going to get bit, it's going to be on a liability claim. And so I'm starting to see these liability carriers that are non-standard, meaning they don't have to follow the state insurance form, the state's approved insurance form. So they can throw in habitability exclusions, assault and battery, firearms, cannabis, punitive and exemplary damages, animals, animal liability exclusion, insects and bed bugs exclusion, interior building collapse exclusion. I mean, the list goes on, and they're getting creative with it. And so, to answer your question, if you're looking at a property, you want to make sure, especially if it's in a not necessarily a high crime area. It doesn't have to be in a high crime area, but especially if it's in a high crime area, you want to make sure the security there is top notch. Now that can change. You're going to say, you know, your average consumer is going to say, how much money is that going to save me on my insurance premiums? Well, yeah, it can save you money on your insurance premiums, but it'll also help me create a narrative. If you have these certain security measures in place, it can help me create a narrative to get assault and battery coverage included, right? And if someone gets shot on the property or get a firearms exclusion removed, and someone ends up getting shot on the property, well, now how much did you save?
Yep. Yeah, so everybody knows I'm in the security and automation business. That's what I do, and
I feel like I should be facing you.
We have a
It's bothering me more and more.
and we have a package that goes on multifamily properties that will cut down on the cost of the insurance. So I baited you in that question, and I apologize for that. But
No, you're good. No,
No,
it's,
you don't.
no, I don't apologize. It was a shameless plug.
It is definitely, it's something that, and back to the due diligence, I don't know if that was the next question coming up, but
It is.
I'm looking, in terms of due diligence, if you're looking at a property, I always tell my clients, send it to me, okay? And I'm gonna search it. I had one recently where, that I was telling you guys about, where, we insured it for the seller, and there's a large $800K fire claim open. And so, especially if it's a property in North Texas where most of my business is, there's a chance we've quoted it in the past, and I might have some intel. Now, I kind of have to keep, for privacy reasons, I can't disclose too much information, but I can kind of warn you that I'll just base my estimate on what I think that claim is going to impact your insurance cost. But when I'm looking at a property, I'm looking at the size of the building. So a lot of companies now are putting in guidelines where on these older wood frame apartments, non-sprinklered, they're not wanting more than 2.5 million per building. They won't go over 10. I got one that won't go over 10,000 square feet.
Yeah.
I got some that won't go over 20,000 square feet. It's a 87 unit property in Dallas, and if you look at the survey, it shows 10 separate buildings, right? But they all share a roof line.
Yeah. Oh, so is that the fire damage?
So an insurance
Risk.
company sees that and they go, "Oh no."
Yeah.
And so I've got a subsidiary of Travelers that writes it, and they are just raking them over the coals to the point where I told my client, I was like, "Look, I'll send you everything you need to shop. I don't want, because we're friends. We're more. I mean, she's a client, but she's also a friend.
Sure.
And the other owner is my financial advisor, you know? So I'm like, guys, I always want to make sure y'all trust me, and so I'm happy to send y'all whatever, but I literally cannot find another carrier. I can find another carrier, just not at a lesser price than what you're currently paying.
Sure.
And I'm going to have to start layering the carriers out because they see that all 10 buildings are under one roof line, and they're like, all right, we'll put up $2.5 million. You're going to have to find the rest somewhere else.
Yeah.
But yeah, we've definitely had to get creative in insurance. It was a 356 unit, 178 unit, and then a 48 unit. 2 were in Northwest Houston, 1 was in Southwest Houston. One of them had the Kolar wiring, 1 had the Illumicon, and the total based on actual replacement cost, you're probably looking at about 75 to 80 million across. How many units is that? Like 5? I can't do math right now. 3, 6, 4, 5, 6, 6, 5, 25. Like 575 units maybe. And anyway, I sold him a 575 units and a 10 million loss limit over all 3 properties. So it's an occurrence limit. It resets after every fire, after whatever happens. We sold a 10 million loss limit on across those 3 properties. And you would think, well, that's quite a gamble. But when you look at PML, if a building were to burn to the ground, nothing is going to hit 10 million.
That's right.
Your next concern is a hurricane. So now I had my wholesaler run his PML report where they model for hurricanes, and the likelihood of that 10 million limit getting exhausted in one occurrence was like a 1 in 4,000 year event.
Yeah.
And so I already knew the lender was going to come back, or one of them. I knew the bank. I knew the bank wasn't, but I knew the other one was, and I already had all my evidence ready, and they were like, "All right, we'll take it."
That's good. That's really good. So it's a matter of just getting creative, right? With all the data that's there. So that's where you're able to help save some premiums.
Yeah.
So what else are you looking for in the due diligence phase? Like, obviously we do due diligence, and we're taking all these pictures on the interiors, and I know electrical panels are part of it, and plumbing's part of it, and these other things are part of it. But what are the other things that you're wanting to see in due diligence to give you the warm and fuzzy that this is a good deal, or tell your carriers it's a good deal?
Crime scores in the area to start with liability. On the property, it's back to your point. You know, insurance companies are looking at 4 main things, okay? The roof, and they're getting creative. They don't just have to do an aerial Google view like we can all do anymore. I actually have a artificial intelligence insurance company that spotted curling within the shingles.
Wow.
Oh, they're getting good.
They're getting good.
They're getting real good. And and then I'll give you an example. Like on the wiring, you know, even if it's you know, aluminum wiring building with an effective remediation method like Illumicon, Copalum is obviously the gold standard. I've seen maybe 2 properties that had the Copalum crimp method, connectors or whatever done. But it sucks because, you know, as an owner, you do the right thing. You put the Illumicon connectors in, and you still feel like you're getting bullied by these insurance companies. It's not financially feasible to rewire an entire building unless you are already planning to gut rehab the whole damn thing.
That's right.
Or dang thing, sorry, no cussing. But the wiring, the seller's capex, okay, what has the seller put into the property? I can tell an underwriter all day that, oh, my client's going to put all this money in the property. Well, it's still an older property. If you're going to offer replacement cost, they want to know, what have y'all put into the property? Because frankly, if a fire happens and, you got some slumlord seller, it financially benefits them if a claim happens.
Yeah, I'm working on a property right now where it's stab lock, right? So they have stab lock in every unit, and the panel's in a closet. And where the panel is, on the back side of the panel, is the other unit, right? So where in some cases it's in a closet and you can turn it to the outside wall and it's still inside that same unit and it works. But in this case, you can't flip the panel and rewire.
Oof.
So now it's a full rewire if you're going to do it. So real life example that I'm going through now, it's $5,000 to $6,000 to rewire that whole unit. Or you take that same money and you pay higher premiums.
Where's the property?
It's in Texas. It's here in Texas, North Texas. And so they look at me and they go, what do we do? And I go, you're not replacing your panels. I want the work, but you're not replacing those panels because it doesn't make sense to rewire. So now you're going to have to eat the insurance premium. So I'm working through those things. And then I'm working on another one in South Texas to where we're doing Kolar. They've already done pigtail. They did pigtails on the first remediation, the previous owner, and he only did it in the bathrooms and the kitchens, right? He added the GFCIs and he did pigtails, but he didn't do the rest of the property at all. So now we're having to go through the rest of the property and do that. So working with the insurance carriers on those types of things to remediate the cost of future claims, but also premiums as well. So those are some things that we're seeing that insurance carriers are getting more stringent, right? They're getting more cautious on that. And what we've said in this whole new market and the craziness that we're going through is everybody in every category is getting more defined and more strict and better moving forward, right? So we're all going to be better at the end of this after this market really makes it shift. But are we all making the changes to be better at the end of this? And so, I'm learning a lot during this time of how can we be better? What things do we need to look for? What's our due diligence team need to do to be better and look forward to, in all things, security included, right? With the package that he offers on, keyless entry and security and HVAC control. What does that do for the carriers? Does that make them feel better because there's now security on the property in some of these B's and C's and even D properties, now that they're not being vandalized, they're not being squatted in and things of that nature. So what are all these parameters that everybody's looking for to be better operating moving forward? And so insurance obviously is a dictator of the cost of a monthly cost per unit, right? So how do we all get better at the end of this? And so that leads to kind of where we are on this conversation.
Gotcha. Yeah, and back to, you had mentioned doing the Kolar, and just to not to get too off in the weeds, but I'll give you an example. I access a program that says aluminum wiring exclusion with limited coverage endorsement.
Yep.
So, and I called the underwriter one day. I said, so if a tenant falls asleep smoking a cigarette, burns the building down, but they find unmitigated aluminum wiring, you would deny a claim off that? He goes, yeah.
Yep.
We have grounds to. And I was like, that's a little messed up. Even if the cause of origin proves that it was the cigarette, but I'm starting to see the carriers say we don't want pigtails anymore. Yeah. Kolar's not there yet, but I am starting to see where, and general liability carriers included, they want the Alumicon. They want those purple wire nuts because think about it. If a fire starts, tenants can get smoke inhalation, or even worse, die from it. So there's one very evil carrier that has an injury by fire exclusion. Oh yeah, they get to wipe their hands clean of it, man.
Wow.
Market of last resort. But anyway, man, to improve the insurance on your properties, if you're not gut rehabbing it, the roof is becoming huge. The electrical, and try and find properties that are, I know most of the properties that I insure are value add deals.
Sure.
So you're going to find properties that have not been adequately updated, and I get that. But I can still craft the best narrative that I possibly can if the seller has done things to at least keep it in a decent condition.
Yeah.
Okay? I mean, and they're going to do a street view. Like, I had one declined because the damn one of the balconies was hanging off. And I had lunch with the client a couple weeks ago, and he goes, I know exactly which one they were talking about. And I was like,
just lock the door.
I was getting so frustrated because I couldn't find it on the
I'm
Google
going to
Street
fix
View.
it. I'm going to fix it.
and they're looking at parking lots, and it's one really frustrating thing is when they actually do their inspection via Google Street View because they're too cheap to send someone out there.
Right.
And it's like, guys, this is from 2018. Here's invoices from the prior owner showing that he resurfaced the entire parking lot.
Yeah.
So from a liability standpoint, carriers look at that because the most common claim is your trip and fall.
Yeah.
Half of them I think are bogus. But I did one I did think was bogus. She had fallen through the upstairs walking to her unit, and I get an email from a law firm that I get more liability emails from than any other law firm.
Yeah.
I know them by heart.
I do too.
I won't say their name, but I'm like, so my first thought is just like, okay, here we go again. This is why premiums are going up. And so I call my client, then I call the on-site manager, and he goes, no, I was actually there when it happened, and it's legit. She had literally fallen through the second.
Oh, goodness.
Yeah, that was bad.
Well, here's your opportunity to entertain us. What? Give us a story. What's your best insurance story you've got?
A lot. I mean, where do I start, man? Nightmares before closings, lender wanting sinkhole coverage on a property in Louisville, which I don't write much in Kentucky, but apparently they got a huge sinkhole problem. We're starting to see it actually here in Texas. So I can still get waivers here in Texas, but I had
Fracking.
I had 72 hours to go find a standalone what's called a difference in conditions policy that covers earth movement. Because earthquake, mine subsidence, sinkhole collapse, all that's excluded under not only non-standard carriers, but also standard carriers.
Yeah.
It is all excluded under earth movement. That's why you have to get a standalone earthquake policy if you're in California, or there's actually now seismic activity running around that Kentucky area.
Yeah.
And then my account manager actually lives in Oklahoma, and she added earthquake coverage to her homeowner's policy.
Oh, wow.
Because it's
Starting
not
to feel it.
There's actually been a few in Texas too.
Yeah. Yeah, in Texas.
Yeah, we did Irving.
Yeah,
Mhm.
Irving had one not too, the last couple of years. So.
Yeah, but I guess if I had to pick the craziest story, I could go on about large fire claims. It was one. The one that comes to mind is. And there's even a funnier part to it, but I can't say that because then people could track it down. It was an owner. He owned 528 units outright. No lender. Didn't carry property coverage.
Oh, wow.
Yeah, I'm all about it. I'm all about a good gambler, man.
Yeah.
Let's roll that dice. Let's take that 5%. Anyway, but he kept general liability, and I had met him at a construction expo because at the time I was still kind of trying to, diversify my book. No, forget that. Don't be a generalist, be a specialist. Okay, I'm all in on this. And so he's like, "Oh, my general liability's coming up," and so I quoted it, and I remember I sent him. I was like, "Hey, Kevin, I have this cheap quote, but it has these concerning exclusions." And he goes, I don't need those. I said, "Kevin, stop, please. Like, liability is just not something to cut corners on, okay? You know the cost to replace your roofs. If you want to take a 5% wind hail deductible, aka tornado insurance, by all means, just know your end cost. If you want to take a $100K fire deductible, that's fine. Just your end costs are going to be $100K as long as you're adequately insured. Liability, if you have a firearms exclusion and someone's shot on your property, and then the families are grieving, and then after the grief comes the greed. That property owner is going to get drug into a lawsuit.
That's right.
And I told him, I said, "Look, this one's more expensive. I'm not trying to upsell you here, but just take this." And then I remember, Keith, he goes, "Okay, I get him to take the policy with no exclusions." Then now he's arguing me, and he's self-managed, and this is key. He didn't have a third-party property manager. He's self-managed. So he took, he's looking, he goes, "What's this hired and non-owned auto?" And it was like, it's a $400 flat charge that's added to the general liability policy for an apartment owner, okay? Now, hired's not going to really hired's not really going to come into play. That's like if you're renting an auto. Non-owned, if you self-manage and your maintenance workers, let's say they're running errands, Home Depot, going to the bank, whatever. I remember, and this guy, you got to keep in mind, no lender, 528 units. I mean, he's sitting on, what, a cozy 40 million? I don't know what his NOI cap rate, I don't know, but I mean, at least 40, surely to God. Well, at least at peak 2021 prices.
Right.
Yep. And he is arguing me over this flat charge. I'm like, I know why this guy's rich. And I finally explained it to him, and I'm like, here's why you need it, because I know your maintenance workers do not have a business use endorsement on their personal auto policy, if they even carry insurance at all.
Right.
And and so I finally saw him on that $400 flat charge. 3 months later, his maintenance driver is pulling out of the parking lot, and a 2-year-old, she's 2 or 3 years old girl, runs out from the parking lot, and he hadn't killed her. Mm. And I know it's a dark story. It sucks. Like, it's sad to think about, to this day. But the insurance company I had, I'll never forget. I pulled that insurance policy just from an E&O standpoint, panicking. Because I always know to add hired non-owned auto. I even do it if you have a third-party property manager, right, just to play safe. And I've never read 30 pages of a policy so quick, and I see that endorsement on there, and I'm like, oh, we're good. It's covered. His court costs are covered, and they don't reduce his million per occurrence limit or his umbrella on top of that. It's covered. Yeah. And we're good. And so when I get on Twitter, and I see people that type, "Insurance is a scam," yeah, I'm like,
it is until you need it, I guess, right?
Exactly. Yeah.
It is for sure until you need it.
It can be it can be a little frustrating to see things like that. And but I understand people that, I won't even name the insurance companies, man, but yeah, I can understand why people, when they do have a claim, they feel like insurance is a scam.
Yeah. So
you got to have a good broker. There are certain companies that I refuse to write with.
Well, you got to have a good broker that really understands the industry and is willing to walk down the path with you and understand what you're looking to do, like yourself, to help them understand what they're missing if they decide not to go with this policy versus this policy. So I think it's huge. So, hey, how I want to end it today, because on a lighter note, let's do a lighter note here. I know you're young, right? You're much younger than we are, but
hey, don't include me on that.
Okay, well, we're old, and you're not.
I'm 35.
Well, I know.
But I'm 27. You do know I'm 35?
No, you're 27. I know exactly how old you are. So,
I have children almost your age.
Yeah, me too. And you've done well in this business. You've really developed a good name for yourself. You network well. But what made you choose this business? What made you choose insurance? Because insurance is not a sexy business at all. And it's kind of funny because we've connected over years, right? And it's like, what are you doing? Why'd you do this?
Yeah, I was at University of Houston, and I got a biology degree. I was thinking about dental school initially.
So you're a real nerd, basically, is what you're saying?
Yeah, you know, but I mean, I was pre-pharmacy because UH had this kind of, expedited program, and then I just realized I would be so miserable as a pharmacist and I make a good living. And then I was thinking about dentistry because at the time, you go and UH is very diverse.
Yep.
So you're dealing with a lot of kids that have parents that are engineers, doctors, and they are basically doing it to impress their parents. And so I basically just tagged along. I mean, my best friend that went there for pre-pharmacy, I literally went to U of H because I was like, oh, my best friend's going there, and I'll just study what he's going to study. That's pretty bad.
That is really bad.
Yeah. But it's like you're also 19 years old. Like,
But you're going to have a lot of fun.
Yeah, like how are you supposed to know what you're going to do for the rest of your life at 19, And then my sister had worked at Ramey King, and she had mostly done construction. I mean, she is a bad for sure. And she, I remember she called me and she said, guess what my paycheck was this month? And so, I mean, when I graduated and just sitting there with a biology degree, I mean, what was I going to, go sample the park for the city of Houston? And when it's...
Sounds like fun.
I mean, yeah, in Houston, it sounds even worse.
Yeah.
Only thing I like about Houston is their insurance rates. Sorry, edit that part out. No, I'm just kidding. But yeah, she told me to just come sell insurance, and I didn't really have a passion for construction. At first, I was door knocking in the 100-degree heat, businesses, and which I will admit, residential door knocking takes a different set of boldness. To door knock someone at 7 p.m., because businesses kind of have to be respectful.
Yep.
Yeah, they have their little no soliciting sign. Yeah, okay, cool, didn't see it, But it's funny, the last two people it was a Frontier salesman and then a Vivint Smart Home Arena. So,
And you got to get the guys that are coming off mission that already know how to take objection from hitting doors. So,
Exactly. And I bought from both of them, but it was mainly out of respect because I just respected a door-to-door salesman. But yeah, cold calling anyone who would give me an appointment.
If I get a good one, I'll try to hire him immediately.
Yeah.
Oh yeah.
I was door knocking
knockers,
for a
yeah.
while,
Oh,
so
yeah.
I had a tactic that I used. I kept 10 pennies in my left pocket, and every no, I would put one in my right. And if I ever got all 10 over in my right pocket, I would quit for the night. It means I sucked, right? But if I got a yes, I had to take everything from my right pocket and put it back in my left, and I would keep knocking. And that was my routine. I door knocked for years, and in the roofing world, right?
Yeah.
And man, mad respect for door knockers. It's the most humbling experience of your life, but also the best personal development that I ever had. How to talk to somebody. You have 2 seconds. You have to impress them.
Yeah.
And so it's just a different world. But
Yeah.
yeah door knocking is not fun.
You learn how to eat rejection, and that helps you in other parts of life for sure. But yeah, definitely. Yeah. You start out just pounding pavement,
And so you came over and you started, and Jeff took you under his wing, and
yeah,
went from
me
there.
and Jeff
Or beat you, I don't know
Me and
which.
Jeff were driving his F-150, and he finally got a new truck, thank God. But yeah, he would just take me to expos, conferences, case studies, things like that. I mean, I remember my first Saturday or my first week at Ramey King. He asked me, he goes, "You want to go to this event on Saturday?" And I was like, "What the hell?"
It's Saturday.
I was like, "It's Saturday," But I'm really glad he did. He's not only just showing me how to network and You know, he's more of an introverted guy. I'm more of an introverted guy. I might come off extroverted once I'm comfortable around you. But the way I kind of built my book was really more being just a technician more than anything.
Yeah.
So.
Well, hey, I want to thank you for coming out and joining us and giving us your knowledge.
Absolutely.
Appreciate it. Yeah.
Yeah, it's not a sexy business all the time, and we know insurance brokers get a lot of flack, but we consider you a friend, and we talk about you all the time, and so
Usually it's not good. We won't.
well,
but
we talk negative about you all the time. I didn't want to say that, but thanks for pointing that out. We talk negative about you all the time, but we also know that we have friends in the business. So
It's tough for sure, man. You don't want to present these. People are getting pinched on property tax appraisals. People that took floating rate, that's an obvious one. And then you hit them with that insurance increase, and it's just, it gets uncomfortable.
Yeah, it's very, very nice. So, but thanks for coming on. And if anybody needs to reach you, how would they reach you? Is there, you want to give them your contact information, or they can contact us and let us know?
Yeah, is there? I can write it down.
Oh, we can hit it on the screen
We
later.
can put it on the screen. No
I'll
big
write it
deal.
on this table.
Yeah. No, please don't.
Yeah, and anyone who's watching, 940-395-6606. That's my cell. Don't ever call my Ring Central office number. I hate that app so much. Hopefully that company doesn't sue me for saying that. But
Yeah.
and then my email is just aaronkelsoe@rameyking.com. Our website is rameyking.com. And then I'll give it.
Reach out to us. We'll put it on there. But I'm going to pause just 1 second, and I want you to think of one golden nugget, one thing you want to tell people, and I want you to look in that camera, and I want you to tell them about insurance, how you can help them.
How I can help them?
How you can help
Are they a current property owner, or are they looking to buy a property?
either.
Okay. Send me, if you're looking at a property, send it to me. I'll find that fire article. People change the name of an apartment complex, and they think that that's going to hide the shooting that was reported. I'm going to find out the information. If it's a property in North Texas, or anywhere in Texas, we've likely quoted it before. I likely have information that you wouldn't find out until you're performing due diligence. If you're an existing owner, I tell people all the time, man. Sometimes they'll send me their policies, and I'll tell them, no, you have great coverage at a competitive rate, and you don't need to move. I know you're upset that it went up 10%. Frankly, you should be grateful about that. Not to sound insensitive, but regardless, reach out to me with questions. Reach out to me for a policy review, and I'm happy to help anytime. Whether it's underwriting insurance costs for a property you're looking at, or renewals coming up, or you're in the middle of your policy and you just want to make sure you're covered right.